Hello everyone and welcome to the weekly market update from ICM.com. We're going to start with the key market movers for the past week and then highlight the top economic events for this week and go over some of the major charts on the MetaTrader 4 platform. So among the key movers remain COVID-19 implications on the economic recovery. We are still seeing record one single day cases in the coronavirus, especially in the United States and other countries that are among the top the top infectious countries. So this is raising a lot of concerns over the economic recovery of these countries, especially the United States, since this is the first economy in the world. Also in Europe, we started seeing some alerts regarding the second round of coronavirus. So this could also weigh on the hopes of a fast economic recovery during the third quarter of 2020 in the Eurozone region. Among one of the movers last week on Wednesday, we had the Federal Reserve. There's nothing much from the Federal Reserve, but also the Fed highlighted what we just mentioned, that the COVID-19 is still adding downside risks to the economic recovery, and still they can't assess what will come in the future until there is they can ensure that people can get back to work normally. So this should be ensured by definitely a coronavirus vaccine. So also following the Federal Reserve meeting on Wednesday, we had on Thursday the first reading of the second quarter GDP from the United States, which was the worst ever, showing a huge contraction during the second quarter due to the lockdown that took place during April and the beginning of May. So this had a catastrophic impact on the economic activity, and definitely we've seen a contraction during the second quarter. On Friday, from the Eurozone, the figures were worse than expected. We should witness always the gap between the Eurozone region and between the Eurozone and the United States. The difference between the two was weighing on the market, on the risk sentiment in the market. We've seen when the differential in monetary policy, or the divergence in monetary policy started to come closer due to the Fed's response to COVID-19, and it is clear on the bonds of the US bonds and the German bonds, the yields of these bonds. So definitely this had an impact on the market. So now also we have to monitor the economic progress in the Eurozone region and the economic recovery, and also the economic recovery and progress in the United States. If there is a gap between the Eurozone recovery and the United States, this could be in favor of the euro, this could be in favor in other risky currencies, and if we witness that this gap comes closer, so these countries, maybe they will face a second round, which will weigh on the hopes of an economic recovery. This will make them closer to the United States. So maybe we could be seeing another bounce back and the recent move towards the reversion that was available during June and earlier in May. So always mind the gap between the countries, how they are performing, how's the economic recovery going on, and whether it is highly affected by the continuous spread of the coronavirus. So this would weigh on investors' appetite. We had also the US earnings season. The top US corporations reported their earnings. We've seen that the tech giants remain so solid and strong against, on the back maybe on other corporations. So, and this is definitely obvious on the performance of the Nasdaq relative to the S&P 500 and the Dow Jones. So the tech giants remain stronger than others, and they are benefiting from the pandemic, since the pandemic and the lockdown that's taking place due to the pandemic, the personal lockdown, since the authorities aren't recommending lockdowns in order not to hurt the economy. So this is weighing on the performance of companies, while other companies are performing better. Moving to the next one, which could be a very hot topic in the coming days, since there is a recess coming in the United States. So lawmakers will have to either set their stimulus bill before the recess, or they have to postpone the recess, since we know on July 31st the $600 or the unemployment benefits stopped. So this will put Americans under pressure until the new bill is released. There is definitely a fight between Republicans and Democrats. Back then, Democrats ordered or asked for a $3 trillion bill, and currently and the Republicans are refusing it since they don't want to inflate the budget, and this won't support them during the coming elections. So they're looking for numbers between what they proposed and between which is around 1 trillion, and between what the Democrats proposed, around 3 trillion. So this is going to be a key mover for the market in the coming days. Moving to oil, we witnessed low volatility in oil for the past couple of weeks, especially since there weren't much happening on this front. Starting August, the top oil producers, they agreed before that starting August they have to reduce their output reductions or cuts. They're gonna reduce their cuts. So this could mean that the market could get oversupplied if we don't witness a clear recovery in demand levels. Now all investors are afraid that the impact of the coronavirus would be strong on the economic recovery, and this could weigh also on the demand levels. And if demand levels are going down and producers are pumping more oil to the market than the previous weeks, so this could lead to a supply glut, and this could weigh on prices on the long run. So these are the key movers that you have to witness. You have to make sure you keep up on them. We have a lot of economic indicators this week, and especially we have also 2 central banks meetings, so we have to we're going to talk about them right now, so make sure to follow up on them. So moving forward, we start with Tuesday. We start early tomorrow with the Australian retail sales figures, which are expected to have risen by 2.4% back in June. It shows a little bit of an expansion relative to what happened in May, and especially in May we witnessed this huge bounce following the lockdown. After that, we have the Reserve Bank of Australia interest rate decision. There are no expectations of an interest rate cut, but also the market is expecting the RBA to express again its willingness and commitment to put the economy back on the right track. But also what's happening in Melbourne and the outbreak Melbourne in Victoria is like is around 20% of the Australian economy. So back last week, the Reserve Bank of Australia, Governor Love, he mentioned that if this will weigh on the economy or the economic outlook, the RBA could use tools, maybe could lower the interest rates to 0.1%, or maybe could increase asset purchases in order to support the economy and put it on the right track. Moving to the Eurozone region, we have the producer price index for June, expectations of a rise by 0.5%. Then the United States, the factory orders for June, also economic recovery in June by 5%. So the expansion in factory orders by 5%, supported by the economic recovery that took place back in June ahead of the second wave of coronavirus, we can call it, what happened starting late June to July, and with what we are witnessing now in the United States. Also, we have the American Petroleum Institute weekly crude oil stocks, the usual. Last week we had a sharp drop in inventories, so watch out for this also. Then from New Zealand, we have the jobs report for the second quarter. The employment change is expected to drop by 2%, definitely due to the impact of coronavirus, and the unemployment rate to rise 5.8% from 4.2%. This is for Tuesday. Moving to Wednesday, we have the services PMI, the final reading of the services PMI in July. Last week we witnessed the preliminary reading, so nothing is expected to change from the preliminary to the final reading in the Eurozone and the United Kingdom. Also, we have the Eurozone retail sales for June, expectations of a rise by 5.9%. Bank of Japan Governor Kuroda also will be speaking on Wednesday about the role of central banks to ease the impact of COVID-19 on the economies. Moving to the United States, we have the ADP non-farm employment change, expectations of a build-up, or expectations that the U.S. economy have created almost 1.5 million jobs back in July. Moving also remaining at the almost same time, 12:30 GMT from the United States, the trade balance deficit in the trade balance of around 50 billion, 50.1. And then one of the key events, also economic releases for the week, the ICM non-manufacturing PMI for July, expectations of a slight drop towards 55 from 57.1. This could be an effect to the recent rise in coronavirus numbers, and how did it impact the economic activity in the United States. And then we have the weekly oil report by the U.S. Energy Information Administration. Expectations of a rise by 0.357 million barrels versus a sharp decline of 10.612 during the past week. On Thursday, we started the inflation expectations from New Zealand, and then we have also the Bank of England interest rate decision. The bank is widely expected to keep interest rates unchanged at 0.1%, and also the Bank of England QE total is expected to remain at 745, not 25, 745 billion pounds. So the bank could adopt the wait and see tone until they have like further developments in the United Kingdom. And then we have the German factory orders expectations also of an expansion by 10.1%. The United Kingdom construction PMI for July also an expansion towards 57 from 55.3, a tick higher. The United Kingdom economy is expected to perform well during the beginning of the third quarter. And then we have the weekly jobless claims from the United States, expectations of 1.408 billion claims. On Friday, it's a very important day. Also, we have the RBA monetary policy statement. It's very crucial for those who are following the Australian dollar, since they will grasp an attention on how the RBA is looking at the market and what is considering for the monetary policy. We have also the trade balance from China, expectations of surplus by around $42.5 billion. From the Eurozone, we have the German industrial production and the German trade balance. It's better to watch out or to follow carefully the economic figures from the Eurozone, especially from Germany, since it's one of the key economies in the Eurozone region. So that's why in the Euro region, that's why that's relative to what I mentioned earlier, due to the to mind the gap between the economic progress or performance in the Eurozone and in the United States. Moving to the United States, the jobs report is the first Friday of the week, of the month. So definitely we have the jobs report from the United States. Expectations that the economy has created around 1.6 million jobs back in July. Unemployment rate also ticked lower towards 11.5, towards 10.5 from 11.1, and the average hourly earnings dropped by 0.5% month on month. So this is from the jobs report from the United States. It's one of the top economic events or top economic releases of in the market, and it is out. It will be out this week, later this week. Also, we have from Canada the jobs report. Employment change is expected to rise by around 400,000 versus 952 back in June. Also, the unemployment rate is expected to drop towards 11% from 12.3, and we end the week with the IVPMI at 57.5 expectations versus 58.2 prior. So these are the key economic releases. Just a small recap. On Tuesday, the Reserve Bank of Australia monetary policy meeting. On Wednesday, we have the ICM and non-manufacturing PMI from the United States. On Thursday, we have the Bank of England monetary policy meeting. And on Friday, we have the RBA monetary policy statement and the US jobs figures. So now let's go to the MetaTrader 4 platform and talk about some of the key events, highlight some of the key moves in top currency pairs for this week. So let's start with the euro dollar. So what we've been seeing for the past week or so is a sharp rally in all currencies against the dollar, supported by the fact that the US economy is struggling. It is the gap between the economic progress in other regions or other top economies and the United States is widening. The US is still being affected by the continuous spread of the coronavirus, while other economies are more relaxed and their economies are back on the track, and the economic activity is pushing a little bit higher. So this definitely had an impact on the strength of the dollar. Also, since this will raise the bets of further monetary policy stimulus by the Federal Reserve, if this continues to weigh on the economy, the Fed will have to act again to support the market. And also there are some bets or talks on the coming fiscal stimulus from Trump's administration. So these weighed on the dollar definitely, and we witnessed like the euro dollar rose to its highest level since almost mid 2018, and then this is what we're gonna show on the weekly chart. So on the weekly chart, it's very clear that we had the series of higher highs bullish weeks closing on gains. However, on Friday, since we had a negative, worse than expected, not negative, worse than expected GDP figure, this weighed on the sentiment, and we witnessed some pullback from the stretched or overstretched markets, and the euro dollar went lower, and this is obvious on the daily chart. We can see here this reversal candle or this reversal formation on the daily chart. So if you are looking to join the trend again, what you have to do is just look for retracements to join. So maybe if you'd be more comfortable with Fibonacci levels being almost close to previous tops and resistance, maybe 1535 could be one of the levels that you have to watch out for as a key level, and ahead we have the minor level near 1630. So these are the key levels if you are looking for a further drop in the euro dollar. And on the contrary, for the upside, so just in order to for this to resume, or for this this trend to come back higher, we need definitely to close back above, or to move back above 118 level, and this will maybe we can trigger another resistance near 1905, which was the highest ahead of 1920 and 120 psychological level. So these are the key levels if you are trading the euro dollar. Let's add some technical indicators to see how they are looking. So on the daily chart, we can see that the bands are so wide, and we have a bearish engulfing candle here, and we have a higher tip. So this was a little bit of a reversal signal in the market. I witnessed a reversal towards this previous support. It's going to look clear on the hourly chart. So maybe we can have a little bit of a correction towards the 1570 level that we just highlighted a while ago. So this is on the daily chart. The RSI is dipping back below the 70 from an ultra overbought area. On the H4, we're trading currently at the lower band of the Bollinger Band. Prices touched the lower band and rebounded towards 1740. On the hourly chart, we found some support near the 200-hour exponential moving average, which was supporting this trend prior, along with the 100-hour exponential moving average. We've seen how the 100-hour exponential moving average supported this trend. Buying the dip was successful here, 1, 2, 3, and almost 4 times. However, the 5th time, the 100-hour exponential moving average didn't hold, and we found support near the 200-hour exponential moving average. We have almost a slight divergence here. It's not very clear divergence, since the RSI is almost equal while we have a lower price. So watch out for the performance of the euro dollar. As we mentioned, 118 is a pivotal level for those who are trading the euro dollar. Moving to the pound. So almost similar formation. You can see similar formation to the euro. The bands are wide. We had this top here, like definitely an evening star formation, but we need to have a clear close in order to have a clear reversal signal on the pound. Among the key levels that you have to watch out for or monitor, 2820, which is a bit far on the weekly chart, on the daily chart, and from the upside 131.80, and above even 132.77, which was the highest level back in early January. Late December, early January. So these are the key levels. We're currently in the middle. If we go to lower time frames here, we can see that the price is finding support near the 100-hour exponential moving average before in early 21st of July and 23rd of July. The price has found support near this level. So watch out how the price will react with the 100-hour exponential moving average, whether it will hold or not, and we retest again the 200-hour exponential moving average. The minor resistance could come in at the previous high at 3170, and then again at 3270, and support zones near the 200-hour exponential moving average at 129.30 and again at 28.20. These are the key levels to watch out for if you are trading the British pound against the dollar. Let's move to the dollar yen, which finally moved last week following a sideways move. So we can see here how the Bollinger Bands were wide, and on Friday the rebound in the dollar continued today, and currently we're trading near the 20-day simple moving average, which is the middle band. So we are here at a key pivot point near the 160, 160, 50, 106.5, and 106 is a pivotal area for the dollar yen. So watch out how the price could react. In order, if you are looking for some levels, on the bigger time frame, definitely we have to cross above this trend line, which is holding the move. So it's around 106.7 on the upside. Also, we have resistance near the previous high of 1810, and on the downside, support levels. We have the lowest level reached, which is almost 114.60, and we can also find some supports if we just go closer on the hourly chart. It's this dip that we witnessed earlier today, 105.70, which is also the 38.2% retracement on the Fibonacci. So watch out for these key levels if you are trading the dollar yen. Let's move to the Australian dollar against the US dollar. This is what I was talking about, the impact of the coronavirus on the sentiment, on investor sentiment relative to a currency. So along with the dollar strength that started on Friday, we are witnessing that the Australian dollar was a bit weaker than the other currencies relative to its performance previously. So we can see here when Australia was able to clear to sustain the activity, to restart the activity and sustain the low level of COVID-19, it was more attractive to investors than other. The Australian dollar was more attractive to investors than other currencies, and witnessed this huge rally in the Australian dollar against the US dollar. However, here when the Melbourne is back on the screen, we're witnessing that the rally was very little relative to the euro and the pound. So this is from the Australian dollar. Definitely you have to watch out for this zone here, which was a resistance and then another support. So watch out for any break below 70.60. Also, and this could be coinciding with almost this trend line here. So you can here draw these trend lines. We have steeper trend lines and we have another one which is less steep. So almost 69.70, which coincides also with this previous support zone here. So watch out for these levels on the downside, and on the upside, in order to return to the positive medium, we have to definitely close above our move above 71.77, which could trigger another resistance near 72.24, and on the bigger time frame, we have to look out for resistance near the previous top near 72.94. So these are the key levels if you are trading the Australian dollar against the United States dollar. I'm just going to add some of the indicators and the moving average to see how they are performing with the Australian dollar. We can see that the bands are a bit wide, and we're currently trading near the 20 simple day moving average, which is the middle band, and the RSI is moving lower near its lowest levels almost since April, while the price is much higher than the levels witnessed in April. So this maybe could have some higher chances for maybe a correction. So watch out for any break below 70.60 level, as I mentioned. So now let's move to the New Zealand dollar. Almost same move to the New Zealand dollar. We can see here a bearish engulfing candle, the lowest to close since almost the 21st of July. So this implied further negativity in the market, and we're witnessing a rally lower. The RSI is also near its lowest level since May. So watch out for any correction in this pair. We can draw maybe this trend line here. That would also coincide with the lower band. We're using the 20 period and the 2 deviation, so it's almost coinciding with its bottom. This is for the New Zealand dollar. If we go for the hourly chart, we can see here that the price has moved lower or below the 100 and 200 hour exponential moving average again. And as I mentioned and we highlighted on the bigger time frame, we could witness some support near the 65 level and resistance. Let me just remove the indicator so it can be much clearer for you. So on the hourly chart here, you have to watch out for the previous support near 65 level, and also this above this triple top formation near 67.17. So these are the key levels that you have to watch out for. We had this triple top formation, and we had this support zone here, which was broken today, and we are currently trading below it. So any move towards positivity, we have to move above the pivot point of 66.15 again in order to maybe retest on the longer run a little bit 67.15 level, and on the downside we remain with support near 65. So currently the 66 is almost in the middle, so watch out for how the price will react with this pivotal level. Moving to the SD-CAD, we're almost having here a reversal formation, the SD-CAD, but there are no current fundamental catalysts for the market. Let's start with a weekly chart. We are trading inside, almost inside last week's range. We had this very sharp drop here, and then we had a little bit of a reversal, or the market was trending a little bit upwards today, erasing last week's gains. Moving to the daily chart, we can see that here we have almost exact bottoms. The lowest level reached in late May, early June, and we are currently trading near the same bottom. So if we just go for this, you can see that the bands are the price is trading the 20 simple moving average, but the bands are relative close to each other relative to the previous moves that we witnessed in the SD-CAD. So the pair is waiting a little bit of catalysts or drivers in order to have its next move higher or lower. Moving to the hourly chart, we can see the candles, they are very big relative to the prior candles, but still we are trading inside a small range, which is around 70 pips range, 80 pips range, and the RSI is in the middle. So all the scenarios are available for the CAD. On Friday, I would like to remind you that on Friday we have the jobs report in Canada, so it's one of the key movers for the market. So we have this resistance area. It's between 34.80 and this low reached here, which was around 34.40. So all this area could have some pressure on the SD-CAD or any move up in the USD-CAD. Watch out for, in terms of reversal, watch out for any break below this level here. We are making a series of higher highs, higher lows, but still we failed to make another higher high. Here we had another higher high, but we were making lower lows. So the market here moved a high, another low, another higher low, and we have a high, but we have a lower high till now. So if this high was broken, maybe we could confirm a little bit of a reversal, and maybe we could retest a 34.80 ahead of the key resistance zone near 35.95, which is a bit far. And on the downside, on the support zone, watch out for any break below this trend line, and watch out for the previous low near 33.30. This is on the downside. This is all for the USD-CAD. Let's move to gold, which was recording record or posting a record high earlier today as the market opened. So you can see here these are the 2 hours that usually trade on Sunday. So it's between 9 and 11 GMT. So it shows that a separate small candle here, and we are witnessing a drawback in numbers and gold price as the dollar is recovering a little bit. So watch out for any break below this almost trend line. We tried to retest this trend line, and currently we are trading on it. So we have here definitely a series of highs, which proven to show some resistance near 1980, 1985, and on the downside we have this trend line. So watch out for a daily close below this trend line. And if we have to highlight some key levels, we can highlight the previous low here, 1938 almost, and the previous one near 1910. So these are the key levels on the downside, or the supports, and on the upside we have the 1985. And if you are looking for targets on the upside, as we used last week, we can use the Fibonacci extension. So maybe we can use it between these two levels, the low and the high. So we have the 123.6 Fibonacci extension could come at 1995. If we use the previous low, the 123.6 will be at almost 2003. So 1995 and 2003, if you are using these recent lows and the recent high. So these are the expected levels if you are using the Fibonacci extension. So just to highlight them, we have here 1995 and 2003. 2005, 2003 levels. So this area here could have some, definitely also the 2000 level is psychological level, and also these are the Fibonacci extension levels. So watch out for any resistance near this. Let's have some indicators. On the hourly chart, we can see that the price is still finding support near the 100-hour exponential moving average, almost 1, 2, and currently 3. So watch out for any break below the 100 exponential moving average, which could trigger a downside towards 1928, which is the 200-hour exponential moving average. If we go for the daily chart, we can see that the bands are still very wide from each other. So maybe this suggests either we have a sideways move before pushing higher, or maybe we could have a little bit of a retracement towards the middle band of the Bollinger Bands. That's what was happening during the past periods, but definitely past performance doesn't implicate that this will happen in the future. So watch out if you are trading gold. Let's move to silver. Similar formation, silver. But what's different from gold is that silver failed to post another record high following its sharp rally overnight last week towards almost 2630 level. So we are trading in a range, and the silver is trading almost inside this range. So between almost $26 level, 2630, and on the downside around 2240. This is the bigger frame, and currently we are trading inside near the middle point of this range, so around 24, 23, making both scenarios possible. Let's go to the Dow Jones. So we are witnessing a little bit of a pullback in the Dow Jones here. We had a little bit of a double bottom formation, and the price was able to break above this falling downtrend line here, which held for the past couple of days. And on the break, the market succeeded in rallying higher. We're trading near the upper band of the Bollinger Band, and we're finding resistance near the previous stop here, near almost 26,600. So any move above this level could trigger another rally towards the previous two tops here near 27,050, but definitely we need some fundamental drivers. Maybe it could be some positivity regarding the stimulus bill here. This support held twice on Wednesday and on Friday, on Thursday and on Friday. So watch out for any reversal and any break below this level, because it could trigger further downside towards 25,300. So these are the key levels to highlight if you are trading the Dow Jones. On the upside, we have resistance near 26,600, and the next resistance could come in near 27,060, the previous double top. And on the downside, we have the previous double bottom, which occurred on Thursday and Friday near 25,900, and again at 25,300. So this is for oil, for Dow Jones. Moving to oil, we are, as I said, if you go for the daily chart here, let's use the WTI. Oil following this sharp move that we witnessed earlier, so the volatility is the lowest since almost early January. So currently we are waiting for some fundamental drivers. As I mentioned, the OPEC Plus, they are moving to reduce cuts, and there are some news that the United States already increased production, and also Russia exceeded the benchmark that was agreed in July. So maybe this could have some negativity on the prices, but definitely any positive news regarding the economic recovery and the boost in economic activity could support the prices again. So on the technical perspective, we are still trading inside this range near 38.60 and 42 level. So we need to have any break above 42 or a break below 38.60 level to have maybe a trending move in the market. So let's just here, if we're just going to look for a clear price action, we have to move below 38.60, which could trigger further downside towards 34.55, and on the upside, it's around 42.50, the resistance zone. And again, this could have a rally higher towards a much higher stage near 48.60 or much higher levels, which was resistance and a support, and then turned out to be a resistance when the market was falling and the sell-off continued. So these are the key levels for oil if you are trading oil. And this is all for today. If you have any questions, please write them down so I can answer them. I would just like to remind you that all the information, analysis, news, and opinions are just for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any advice. We're just trying to do this this kind of webinars or this type of market update in order to show you how you can do your analysis and take your trading decisions, and what are the things that you have to watch out for during the coming week. Okay, so if we're just looking for the dollar index, it's completely the opposite to the euro dollar, since it's almost 55% of the basket is euro. So if you just have to look for if fundamentally things are in favor of the euro dollar, what you have to look out for is any retracement levels. So almost currently we're trading near the 23.6 level. So any move higher, or if the fundamentals remain in favor of the US dollar and the gap between the progress in the economic activity in other rival economies and the United States tightened or came closer, so this could be in favor in the dollar, since all this movement, this stretch and this movement was on the beliefs that the US economy would struggle more than other economies, and this will trigger further stimulus from fiscal or monetary stimulus. So this weighed on the dollar. We witnessed also a contraction in the gap between the policies from between top central banks and the Federal Reserve. It's clear between, if you can see the chart of the US 10-year yields and the Bunds also, or the German 10-year yields, the gap is closing, and the euro dollar is moving higher, so this is becoming in favor. So if I'd just like to point thing out, if the fundamentals become in favor of the US dollar, you have to watch out for these levels in the Fibonacci, the 38.2, and then we have a clearer maybe support here, which could turn out to be a resistance near the 61.8 level. But definitely this doesn't mean that the market could move higher. Maybe we are just having a little bit of a correction, and this the prior move could prevail. So you have to watch out for the pattern that would be formed here in order to take your trading decision. If you're taking it from, okay, there's a question with the fact that the pandemic is still going on and OPEC to cut to reduce its cuts, can we assume that the price will definitely go down? From a fundamental perspective, there is much probability that this type of thinking is correct, since if the virus will continue to spread, and this will weigh sharply on demand levels, and on the other side OPEC is adding its supply, theoretically this could affect negatively the prices. But also you have to watch out for the other factors in the market, or the other movers. Among them is the stimulus bills or stimulus reliefs. If one of them, the stimulus bill from the United States, and the other is the asset purchases of the central banks. So if they're gonna boost their asset purchases again, if they're gonna scale up the asset purchases, or the activity of the asset purchases. So this could have some increase the risk appetite in the market, and maybe could be in the favor of oil prices. So that's how you have to monitor it. And if you want to take trades, definitely you have to go for the technicals. So make sure you align your fundamentals with what's happening on the chart. Okay, so perfect. I believe this is it for today. I would just like to remind you that all the opinions, analysis, news, and information mentioned in this webinar are only for educational purposes and shouldn't be taken as a signal whether to buy or to sell any financial instrument, and ICM doesn't provide any investment advice. So this is all for now. On Wednesday, we are having educational webinar added to our educational webinar series, talking about the top trading strategies that you can follow. This is all for now, and thank you all for joining.